All right, so I wanted to do another example in Robinhood instead of Webull because I know a lot of people use Robinhood. If you go to the options here and you go to next week, how we'll do them this week. Because if you're leveraging like a quick day trade or a quick swing trade, so if you look at these on the money options, so the 790, for example, it's not exactly on the money, but close. I need 1.4% to break even. When does Tesla not move 1.4%? So if Tesla's going up, if the chart says it's going up, if I expect it to go up, I'm going to buy that. And I'm going to make my money back at least. Yay, BFLY. Boom. Called that, alerted that yesterday. Hope y'all got in. Anyways, so you'll see you can go so deep in the money. Like, say this, so you'll see people buying way deep in the money. I don't have pockets that deep, but maybe someday. Sometimes I go pretty deep in the money. But if you look at like a 745 call, that thing doesn't even have to move for you to make money off it. Basically, if it just goes up a hair, as long as it doesn't go down, you're good. It's 0.25%. It's like nothing. You can go low enough. Let's see where you go. So if you go around like 690, so if you're willing to spend... If you're willing to spend a buttload of money, you can get it. See, it's almost 0% to break even. It's 0.07%. Like, that's nothing. Tesla moves way more than that. So if you expect Tesla to move up, you bought that, chances are you're going to sell it higher. That's the best way to do it. But that's assuming I want to tie up 10 grand worth of capital, right? So I don't want to do that on one trade. I like to keep my trades around 1 to 5 grand. All right. So for 1 to 5 grand, I can go up here and I'm looking at getting, like a 780, 770. Now you see the difference in between those two is just like $750, but the difference in profit is 1,000. So that's why it's always better to go deeper in the money, because if it goes up, you're going to profit. However, it's also a little more risky. Because, for example, let's say you bought an $830 call. Now, as long as Tesla stays where it's at 792, you lose $295. Let's say you bought a 790 call and Tesla stayed right where it's at 792. You would lose $1,200. Because you would have spent $1,400 to get $200 worth of value, and that's all that the value kept. So, hope this makes sense in the Robinhood sense. Also, I kind of like Robin. No, they don't give it here. I kind of like Robin how they break down the break even and stuff right underneath it. That's nice. But it helps you understand how big of a move it has to make. So you go up. Let's look at something way out of the money real quick. So look, you got, let's say you're buying a $900 call. 13% it needs to increase. That's way out of the money. Pretty cheap though. But when's Tesla going to go up 13% in 2 days? That's 2 days away. Probably not going to happen, right? So what I do with these far out of the money calls, if you ever do see me buying them, let's just say I bought a $900 Tesla call. I might even do that. You know what? Let's do it. Boom. Let's buy a $900 Tesla call. Why not? Because Tesla's been beat down. Now the only reason I'm doing this is because it's $31 freaking dollars. All right. I don't expect Tesla to go anywhere near $900. If it did, this contract would be worth a couple $100 because on the money Tesla contracts are worth a lot. However, if Tesla breaks 800 and sticks around 810, 820, there's a solid chance that contract is going up to maybe $60 today. And so that's just a quick scalp, a quick flip, quick double my money from 30 to $60. Just by Tesla going up a little bit. It's lower risk, so if Tesla does go down, I don't lose that much. And so that's the only way I would play way out of the money options like a lot of people do. Even if you wanted to do it, I think I'm actually currently doing it with next week's options on 850s. You'll see they're so cheap right here. That's crazy for Tesla. It's easy for that baby to get to 200 though, 250. If Tesla breaks 800 and stays above it, and there's a little bit of buying pressure coming in. So that's the only way to buy out of the money options. If not, it's much safer, it's much smarter, it's much more profitable to buy in the money at the money.